Ebo, John, Dana, thank you for joining today. So today I'm going to talk about real estate and real estate investing and the benefits of real estate investing. I'm also going to give like a history of real estate, like quick and dirty, just kind of explaining how this all came about. And I'm going to tell you, I'm going to give you a little peek into my business actually to show you like a transaction that I've been working on and to kind of paint the picture so you can kind of get a better understanding. So this is actually just a random picture. This is a multifamily property, but I just think it's beautiful. And my goal is to eventually buy multifamily properties. I don't have any right now, but I think that's like the holy grail. Personally, there's a million ways to make money in real estate, but we'll get into that in a little bit. But I just like this picture, so I just wanted to share that. Anyway, so I wanted to bring it back to budgeting actually, because this is the foundation of investing. So it all starts with your budget. So if you can't set aside money, every month to save, then there's no way that you're going to be able to invest. So this is, I spoke about this before. There's 4 categories to any budget. There's housing, should be like 25%. You should pay for your roof within a week. There's all your other bills to live. There's money to have fun and enjoy your life for the now. And then there's investing. And I like to be aggressive with that. I think everyone should try to save like 40% of their income for investing. That's just me. I know that's a little unrealistic. Anything at all, as long as it's automated, is great. Even if it's 10%, at a minimum, you should save 10% of your income for investing. So we're going to talk about that portion of this. So why invest? Like, what's the whole point of this, right? So there's 3 reasons people say, like, number 1, increase your spending power. Number 2, you want to counter inflation. And number 3, you want to create income to replace the earned income from your job. So one day you don't have to work a job. You could work a job if you choose to, right? For me, it's a little more personal than that. The reason I invest, I could tell you, like, I started learning about investing at my first job when I was 21 years old, and I worked for Nextel, the old telecom company that got bought by Sprint, like those walkie-talkie phones. I basically was very stressed out, and I came from, being in college and basically doing whatever I wanted and learning about whatever I wanted, to having a boss and a corporate structure and working 9 to 5 and commuting every day. And I was like, how do I get out of this? Like, for me, it was just about planning my escape route, the whole time. So that I could have the freedom to do what I wanted to do with my time. That's really, like, notwithstanding these like textbook answers to why to invest, that's why I invest, And so there's 3 types of income. So it's important to know how they're categorized. There's essentially 3. There's earned income, like from a paycheck from a job, and that's taxed at the highest rate, just so you know. There's passive income, which is cash flow, positive cash flow from real estate, for example. And then there's portfolio income, which is things like dividends, interest from paper assets like stocks, bonds, funds, etc. Today, we're going to talk about passive income, specifically from real estate. So why real estate? So you don't need to read this multifamily here, but basically real estate, I actually lifted this from another presentation that was like amazing. But real estate's the most proven business model of all time. This goes all the way back over 1,000 years to like feudal France and, England, and literally kings and lords and nobles. This is how it was. So the king was like divine by God, right? Sitting at the top here. And the king owned everything, right? The king owned all the land, and he had his little minions out there called nobles or lords, and they would go out and sort of like sublease the land, and they would collect taxes from everyone else, like the tradesmen, the craftsmen, the serfs, the peasants. And that's how it was. Now, no one ever really questioned this system. I don't know how it originated exactly, but that's kind of just how it was. And the knights would protect these people underneath them as long as they paid, their taxes, right? And that's how the word landlord came about, because people would pay their landlords, the lords of the land, for the areas that they lived in. And so this system has worked for a very long time. Is it fair? Is it ethical? I don't know. It is what it is, though. One of the reasons that when people say, like, why did pilgrims come over to the New World, right? The Americas. Back in the day, a lot of people, they'll say religious freedom. They didn't want to pay their taxes, no taxes without representation. Another big reason that's often overlooked, it's not talked about, is land ownership, is property. So John Locke, famous philosopher you may have heard of, he wrote a famous book called Two Treatises. It's like the most widely known one, but he influenced Thomas Jefferson, who wrote the Constitution, one of the authors of the Constitution. And in it, Jefferson says, every man is entitled to life, liberty, and the pursuit of happiness, right? But really, John Locke is the one that coined that. And it was originally life, liberty, and property, because we live in an ownership economy, and not everybody was able to own property. It was like the king and his boys back in England, right? So here in America, we were starting a new country, and they were like, no, everyone gets to own property. And that was one of the big differentiators in America. So when we came here, we had these ownership ideas, right? When I say we, I mean like, the settlers and the Pilgrims, the earliest Americans, right? They encountered Native Americans who were already here, and Native Americans didn't have these ideas about property ownership. They, when it came to the land, it was a communal ownership system. They believed everybody owned the land. Nobody owned it. Was just land, right? It was just the earth. Like no one said, oh, you're on my land, so you owe me taxes that are rent. Like that didn't exist, right? So I think it's important to just understand that like property ownership, it's an idea, okay? And it's part of our society, but it's just an idea. But because everyone accepts it, it's a reality we have to operate in, right? So something I say, I love this quote. I said it myself, but life is a game, and you have to know how to play it, right? And that's why John and I are here teaching you guys about all these things about financial literacy, because that's just the way it is, and you have to figure out how to operate and how to be successful. So I'm sure you guys know who this guy is, the Monopoly Man.
Yeah.
Okay. By the way, if you play Monopoly, that's a very good game to learn about real estate. So
You ever play Monopoly, Ebo?
You asked if I played.
Have you ever played the game Monopoly or?
Yeah, it's a fun game. It just takes
quite
a while. It takes quite a while.
Yeah, if you play the right
It's
way.
really fun.
Yeah, it's fun. It usually ends with someone throwing up the board in protest, and flying everywhere. But good times. So along my journey, this was the book that got me started, Rich Dad Poor Dad. It's like for 20 years, #1 personal finance book, bestseller. Everyone I know that invests in real estate cites this book. And it's the first book that taught me about real estate and the difference between an investor and an employee and a sole proprietor and a corporation. Those are like the 4 quadrants really in the working world. But if you want to start somewhere, I'd say read this book. So, all right, so let's get into the meat and potatoes here. So why invest in real estate? There's actually a ton of ways to make money in real estate. There's house flipping, landlording, wholesaling, investing in tax lien certificates. There's note investing. There's just so many ways. I'm going to talk about 5, okay? So, these aren't like necessarily ways, but these are like the 5 pillars, I guess you could say, of real estate investing, like the 5 benefits. It's an acronym. It spells out the word I.D.E.A.L. Okay, so there's income or cash flow. There's depreciation, which is a tax benefit I'll talk about. There's equity or a store of value. There's appreciation, when a property goes up in value, which is essentially free money. And there's leverage, which is basically the ability to control something that's worth more than the money you're putting into it. And I'll get more in depth about that. And by the way, stop me at any point if you have any questions. Just raise your hand, unmute yourself. Feel free to interrupt. Okay, so I think I have to move this out of the way here. Okay, so income. So for me, like this is the #1 reason why I got involved in real estate. I actually really found out about all the other benefits later on, but this was basically it. I was like, I'm gonna buy properties and I'm gonna replace my income from my job with passive income from real estate. So this is actually a house that I own, actually, believe it or not. So this is in Memphis, Tennessee. I bought this house 6 years ago in 2015, and the numbers aren't exactly right, but I kind of simplified them just to show you so they're easy. But the rent's about $1,000. So the person that lives here, her name is Torsia, a very nice woman, and she's lived there for like 2 or 3 years now. And she pays about $1,000 a month in rent. And every month, these are my expenses, right? So I have a management company, it's usually about 10% of the rent. PITI, which is your mortgage payment, PITI stands for principal, interest, taxes, and insurance. So all that's typically rolled into one monthly mortgage payment for your convenience. Then there's repairs, corporation fees. You always have to account for vacancy because people move out, and then, you know, so I kind of try to like spread that out over time. And capital improvement. So some examples of that are like I had to put in a new boiler, I had to put in a new HVAC system because our air conditioning wasn't working in the summer, which was horrible. Those cost like $2,000-$3,000. So anyway, on a monthly basis, the expenses for this house are about $670. Well, my income is $1,000, so I'm positive cash flowing about $330 a month. And so that's how, you know, you make money from owning a rental property. Okay, next I want to talk about depreciation. This one can get a little confusing, to be honest, but I'll try to explain it as best I can. So some of the, and just so you know, some of these benefits are like totally arbitrary. Like the IRS has set these up to benefit real estate investors because our tax code benefits people who create jobs and housing, right? So that's why corporations pay very little in taxes or sometimes none. And that's why people who own real estate have tax benefits because the government incentivizes people who create jobs like corporations, and they incentivize private landlords like me because we provide housing for the public. So we get tax breaks in order to do that. So that's why if you want to make more money, you need to break out of the earned income category of having a job and move into investing and owning a business. Those people get the most tax breaks, et cetera, et cetera. Anyway, so this is one tax benefit of owning income producing property. It's called depreciation. And basically the IRS says that over a period of 27 and a half years, every investment property that you buy, the value goes down to zero, okay? Is it technically true? Of course not, but it's something that, I don't know how this law came about, but it benefits real estate investors. The thinking behind it is over wear and tear, things need to be fixed and replaced. So that, I don't know how they come up with that number, but it is what it is. Every 27 and a half years, the value goes down to zero. So the IRS lets you deduct 127 and a half, if that's a word, or roughly 3.6% of the purchase price for the house that you bought every year. It lets you deduct that off of your income. So for example,
has that number changed over time, Ben, or is it hasn't always been 27 and a half years?
I'm not sure, but right now this is the number.
Yeah. Okay.
Yeah, I double checked it. Yeah. So for example, if you purchase a house, just to keep it simple, for $100,000, every year you get to deduct about $3,600 from your taxable income. So what does that mean net effective? You save about $1,000 because what's around 30% tax rate of $3,600, it's about $1,000. So you save $1,000. So if you have like a $200,000 property, maybe you'll probably save around $2,000, $2,200, right? So it's a tax incentive to own property. Does that make sense?
Can you get the deduction even if like the value of the house like increases?
Yeah, absolutely.
Okay, that's kind of cool. That's pretty cool.
That's what, and we'll talk about appreciation.
Yeah, but Ben didn't talk about that in the last slide, but
Can I ask you a question?
Slide, Ben.
Can I ask you a question in regards to that tax deduction? This is Mr. Moody. Does that qualify for co-ops and condos also, or only for a home property?
Honestly, I'm not sure. I think maybe, or maybe it's just rentals. I'm not sure about that.
Okay.
I don't actually own a personal residence. I just own rental properties.
Okay, cool. Because I own two co-ops, and I was just wondering because I've never done that before.
Talk to your CPA.
I will definitely do that. Thank you.
Write this down. Yeah. Okay, cool. The next one is equity or store of value. So every time you make a mortgage payment, you increase your equity in the property, thereby increasing your net worth. So again, a mortgage payment is PITI, P-I-T-I. You're paying principal, interest on the loan, taxes, and insurance. Now, these three expenses, interest, taxes, and insurance, these are what are called lost expenses because they don't increase your net worth as you pay them, right? You have to pay interest. Now, they serve a purpose, right? Interest is for the privilege of borrowing money and buying a house that is way more expensive than you could buy without it. Taxes are for, obviously cops, firemen, teachers. School taxes are a big one for the district that your house is in. And insurance is in case anything goes wrong. And obviously legally you have to have insurance. Funny thing, a lot of people complain about having insurance. I love insurance because I've had multiple times when I had to use it. Okay, so one time I had to unfortunately evict someone who didn't pay for like 6 months. And she kicked holes in all the walls. So I had to file a vandalism claim. It cost like $3,000 and State Farm paid for that, thankfully. And another time I had another tenant who left the oven on at like 4 o'clock in the morning and the entire house burned down. So yeah, it gets real with real estate investing. You see a lot of stuff. So I actually State Farm paid out about $130,000 in quarterly payments, and to the contractor and I had to sign off on it. But basically, they paid for rebuilding the entire house. So insurance is important, even though technically it's a lost expense. I mean, if you use it, it's not. So anyway, but getting back to this, so equity, right? So every time you pay down your mortgage, you pay down principal, your ownership stake goes up in the property. So so it's kind of like it's like having a little bank. Like every investment property you have, it's like a little bank, because every time you make a payment, your account goes up a little bit in your equity in the house. You guys have any questions about that? It can be a little difficult to understand if you're not like familiar with this kind of stuff, but let me just pause for a second for any questions.
Yeah, I understand. I understand the concept. I understand.
Okay, cool. All right, so the next one is, this is a really fun one, appreciation. So again, this is going back, this is that house that I own down in Memphis. And so I bought it in 2015 for $74,000. And now I can't even believe it, it's worth almost double that. It's worth $140,000. So 6 years later, in 6 years, the value of the house has increased $66,000. So if you divide that over 6 years, that's like $11,000 a year. So they say, like, with real estate, you make money when you're sleeping. In the last 6 years, I made $11,000 a year, like in my sleep. That's almost $1,000 a month for doing literally nothing. You know, did I make the house better? I mean, did I add an extension? No. Did I make a carport for the? No. I mean, I improved it. I fixed stuff. I
Ivo has a
upgraded.
question. Ivo has a question. Go ahead, Ivo.
Yeah,
Oh,
how
go
do you
ahead.
know like the value of the house? Like, do you have to like go to like some bank or something or somewhere to like find out the value of the house?
There are appraisers, Ivo, that you can get. Also, you know, look, valuing real estate isn't like the stock market where if you see a price on your machine of $100 for IBM,
One moment.
that's what it's worth. You there?
Can you repeat that? Because like there's a lot of noise, so I couldn't
Okay,
really
so
like.
so
Yeah.
valuing a property like this or any property in real estate is not an exact science. Like it's not like owning a stock where you can look on the you know, on your little phone on the market and go to E-Trade and say, hey, IBM is traded 100. I'm going to buy it at 100 or sell. You know, it's got exact. You know what it's worth. The house, you know, you sort of like there are appraisers that'll go through the house. A lot of people look at the value of the house based on what other properties have sold in that area, like in this neighborhood, of equal size, and you know, and again, it's not an exact. Doesn't mean like Ben could go try to sell his house for 140, and he might get 135, or maybe it's really worthwhile, and you get a bidding war and he gets 150. So you know, it's not an exact idea, but basically there are people, and now there's tools online, whether it's Zillow or you know, that you can go to that'll show you what they perceive to be the value of the house. It's not going to be exact. It doesn't mean you could sell it or buy it at that level, but it'll give you a good idea within I don't know, Ben, 5-10%.
Yeah, so it's give you a good idea, basically. Yeah. And sorry, go ahead.
Yeah, Typhoon just arrived. So.
Oh, hey, Taku.
What's
Hey,
up, y'all?
Taku.
So I was gonna say, oh my God, I just lost my train of thought. But
He
yeah,
wanted to know
so
how,
as far, sorry, John, go ahead.
no, Bebo was asking how you would value the house.
Yeah, so how to value the house. So there's a number of reasons why it went up. So I don't know how much you know about real estate in Tennessee, but there's like certain cities that everyone's moving to. So one of them is Nashville, which is also in Tennessee, but I think it's like a 6 or 7 hour drive east. Like Memphis is on the Mississippi River on the west side, and then Nashville's on the east side. But Nashville's become so expensive that people are like, oh, where else could I move in Tennessee? So they're moving to Memphis. Memphis has a lot of history, has a great music scene, Beale Street. Elvis is from Memphis, Justin Timberlake. Graceland is in Memphis. There's a lot of cool stuff in Memphis. It's a great city to live. there's a lot of industry. The FedEx hub is in Memphis, right on the river there. And so there's a lot of jobs, there's a lot of job growth. That's why I bought there, so people have moved there, and the more people, if people move somewhere, houses prices go up. There's like bidding wars, whatever. So that's what happens. Another thing that's cool about real estate is, just it's even in the name. It's called real estate because it's real, right? Like people are always going to need a place to live. They're always going to need a roof over their head. You can't make more land. I mean, maybe if Elon Musk brings us all to Mars, property values will go down in Earth. I don't know. That's probably not going to happen in our lifetime. But you get the point, right? So, what's cool about real estate is it's a store of value. So how do you guys know about like hyperinflation? Have you guys heard of these stories, like what's happening in Zimbabwe or Venezuela? Do you guys know about that?
Yeah, where like the value of the money like degrades so much that like it's really not
Yeah.
worth anything.
Why
at
is it
all.
happening in these African countries?
Well, I don't know that much about it, but I know in Zimbabwe there was some kind of crisis, and the government just printed a bunch of money to avert the crisis, and that just caused everything to get more expensive. That's basically like the bottom line.
I've heard stories of like people like taking whole wheelbarrows of cash just to like go grocery shopping.
Yeah, it also happened in Germany after World War One. It's harder for that to happen in America because our dollar is the reserve currency of the world. So it's different here, but still there's inflation and things cost more than they did, 50 years ago in America. So I'll say this: if a loaf of bread, let's say for example, last week cost $5 and this week it costs $5,000, that's a problem, right? But a house you can write the lease for as much as you want. So for this rent's $1,000. Well, what if now the value's gone down of the dollar has gone down so much that now it's $100,000 a month? You could write that lease. Could people pay it? That's another story. But it's always going to have value. Like people are always going to need somewhere to live, and it sort of like anchors you against inflation because property values don't really fluctuate that much, but they generally go up over time because as the population increases and people move to population centers where other people want to live, house prices will go up. So that's kind of another benefit, is that it anchors you against inflation. When I started investing, I just wanted to invest for cash flow. I view this as like just gravy, like it's the cherry on top. I don't really care that much about it. Like for me, it's just extra. A lot of people who invested for appreciation in 2007, 2008 got burned because that was more speculative. Like, have you guys seen Wall Street 2?
Huh?
Have you seen the movie Wall Street 2?
No, I haven't seen that movie.
It's really good. You should watch it. So it came out in 2009, right after during the financial crisis. And Gordon Gekko is giving a speech, I think at a college or something. And he says, what's the root of all evil? Is it greed? And he's like, no, it's speculation. Because it's like it's gambling essentially. Like you don't really know. That's why I don't buy for the anticipated appreciation. I buy based on facts. That's investing. Investing is based on facts. Like I know this can rent out for $1,000, and next week it's going to rent out for $1,000, and next year or maybe a little more, right? And if I pay this much and I get this much rent, I know my ROI is going to be 10 or 20%. Like that's real investing. That's what a real investor does. They study trends in employment, housing, and they try to make a calculated bet based on, what the numbers are saying. Whereas like people who buy for appreciation, like all those people who this is kind of a funny story. So, well, it's not funny, but I was moving out of my old apartment in Queens in 2012. Okay. And I have this thing on my wall with a couple of rental properties and this whole plan to buy all these properties, whatever. And this guy came in to look at my room and he looked up on my wall and he said, "Oh, you invest in real estate? That's really cool." I said, "Yeah, I buy these houses and I try to grow my passive income every year or whatever." And he's like, "You know what?" He's like, "I'll tell you something. I used to own like 100 rental. He's like, I used to own like 100 rental properties and I lost it all in 2008.
Damn.
You know why? Because he was speculating, because he over leveraged and he was buying thinking that the prices were going to keep going up. And when everything crashed, that happened to a lot of people that got wiped out. So that's why I don't buy for speculative appreciation. I buy based on like how much rent I can get and what I pay. So that was kind of a long rant, but I hope it made sense.
Who sets the value for a house? You?
No. We just, I just asked that question. It was like, so,
It's between the buyer and the seller, basically. You have, Ben has this house, he owns it. He says, I think I want to sell it. I don't want to go down to Tennessee anymore. And so he puts it out for sale at 140,000. And if some guy comes up to him and says, I'll give you 135, and Ben says, no, I don't, it's worth 140. And the guy says, okay, I'll give you one, so it's a little negotiation between the buyers and the sellers. And that's how you get it's almost like an old fashioned barter system. Really.
Yeah, I mean, the value of anything is determined by what someone's willing to pay for it. So if more people want to live there than not, then they'll bid the price up higher and it'll be worth a little more. If nobody wants to live there, that would suck for me. And I'd have to lower the price to get rid of it if I needed to sell it,
Right.
But basically, the value of this particular house, I mean, just from what I've heard, is that more and no, statistically, people are moving to Memphis because it's cheaper than Nashville. They want to be in the South. They want to be in Tennessee. There's a lot of jobs there. There's a lot of growth there. There's revitalization of the downtown area. So, that's why it's appreciating there. Now, is that going to happen forever? I don't know. Like, God, something catastrophic could happen, God forbid, and prices could go down. But I'm just telling you, like, in the last 6 years, this is what's happened to this particular house in this market.
Right. Ben brings up a good point as far as buying this particular property versus, say, a house in the swamp in Florida that has, 800 houses in the area all the same. You got to, there is some amount of smartness to buying real estate. You don't want to, if you're going to be an investor, you don't want to invest all in the same area in case there's a downturn there. And, knowing, what people are moving there, like Ben said, he looked into that. So it's not just the, hey, let me buy any old house. There's a saying, location, location, location. You want to buy a house in a place that's people want to live in and will continue to live in, so
Exactly.
do
And
your homework.
yeah, you have to look at the trends. Like, there's so many examples I could think of, like after 9/11, like right down, I'm the Lower East Side. So like literally I could walk there 20 minutes in the financial district. All the prices went down because nobody wanted to live there. It was a freaking war zone, But now, guess what? Like, prices have rebounded, obviously. But now with the pandemic, they've gone down. I mean, it depends what's going on. Another example is New Orleans, right? By the way, have you been to New Orleans? It's amazing. You should go to New Orleans. I love New Orleans. But anyway, New Orleans, Hurricane Katrina, what was that 2004, John?
No, 14, I think.
14, was it?
Katrina?
no way.
No, it was before that.
Yeah, I think it was 2004.
Yeah, I think it was 2004.
Was
George
that
Bush was
long ago?
president. Yeah, George Bush that was one of his many blunders, like the response. But anyway, so New Orleans, it's a city that I think it's like actually below sea level or
2005, to
something.
be exact.
Oh, 2005, yeah. And there's these levees, and there was this huge storm, Katrina, and the levees broke, and the whole city got flooded, right? And if you remember, like, people on cars and stuff, standing on top of their house, it was horrible. So after that, obviously, the property values went down in New Orleans. But I know people that I used to work with that when that whole area got cleaned up, they went in and they bought a ton of properties because they were super cheap, right? And now they've gone up in value. So depends on your risk tolerance. And I know a lot of other people who bought down there and they've done very well. Me, would I buy something in New Orleans? Never. I would never buy, because if Katrina happened once, guess what? It can happen again. Global warming isn't slowing down. Like, I buy forever. I'm a forever buy guy. I buy forever. I want to buy high ground, not in a flood zone. Like, for me, in my mind, it makes sense to buy somewhere that I see slow and steady growth.
That's why
That said, you could look for deals, but you just have to do your own research and use your intuition and see what your risk tolerance is. But I look at real estate as like, where do I want to plant my flag, like, forever, and just have stability. That's my goal, is stability.
Let's stop.
What was that last thing you said?
My goal is to have stability. So for me, I wouldn't buy in New Orleans. I love to visit there and hang out there. It's great, but I wouldn't want to buy. I wouldn't want to own property there just because, to me, it's too risky because of the risk of a flood.
I feel like that's you see how you say that, right? And EJ just said, during the Hurricane Sandy, they have plans of building a wall around Manhattan instead of the other boroughs. All right, boom. Basically, I feel like that's a problem within this country. which is infrastructure. Because at any given time, just like all of these movies portraying, just like these books, just like actual stuff that's actually happened. No water in Flint. We in Manhattan's damn near like this with the sea level. Literally, feel me? Literally.
Yeah,
It's
crazy.
like if we know all of this stuff, why doesn't our government work on infrastructure of this country so nothing like that could fuck up this country? You know what I'm saying? Because I'll be damned. Because it couldn't, the chances of it happening is crazy, but Manhattan could just get wiped out. And I'm here. You know what I'm saying? So it's like,
I mean,
Me
storms
too.
don't really come up here like that.
not,
You know?
but you get what I'm saying? It's an earth.
Like Hurricane Sandy, when's the last time a hurricane hit New York before that?
Bro, exactly, but you don't never know. It could happen though. Sandy came, for me, before Sandy, you could have said, oh, hurricane never coming to New York. Nigga, Sandy was here though. For me, my father went to, we went to go out to Staten Island and Far Rockaway to help people. So that's how I seen it firsthand. Yo, people was homeless, bro. People that's me and you and younger than me and you was out in these streets. It wasn't no foster kid to take them. No, none of that. No group home, no nothing. They was just out there. It was water up to your ankles, literally. And the people that was there to help them, bro, was only doing the bare minimum. So it's like, bro, this shit is real. So I feel like as a person of this society, I feel like our government needs to focus on that, and everybody needs to try to focus on that infrastructure for real.
I hear you. By the way, I went out after Sandy, a couple of friends and I, we went out to the Rockaways also and helped out because they were really devastated. Like,
Yeah, because they showed it one way on TV, but when you actually left your apartment, left your house, and my father took me to go see that shit, and I'm just like, wow, bro, I didn't think it was like that. For me, I seen it on TV, whatever. I'm thinking everybody's still in their house. They just, you feel me? But bro, shit was crazy, bro.
I know it's crazy. Well, Biden, he's proposing his infrastructure plan. What is it, like 1.4 trillion or something? So they're trying to address it now, you know?
They spend on it.
What's that?
I said it shouldn't matter how much money they spend. I feel like that's something that should be done and fixed like really, really quick. For me, because I feel like it shouldn't be a lot of these world crises going on. It's too much people. We too smart for this. You know what I'm saying? We too intelligent. We actually, out of all the animals on this earth, we have the ability to think and move on our thoughts, literally. For me, we have the ability to manifest something in here and then make it come true in physical world. So that just shows you like, well, we got to take responsibility as people of this earth, like, and start taking care of this earth more. But my fault. It just hit me because that's the only thing with real estate. It's scary because instead of like, boom, they could have focused, instead of fixing the properties, this, that, and third, they could have focused on putting all the money towards fixing the levy, so that could never happen again. And upgraded it. But they didn't even do that yet.
The levees still aren't fixed in New Orleans?
At all. And not only that,
Really?
because of the people who were affected the most, that's the reason for the lack of speed on that. You know what I'm saying?
Wow.
Which is messed up because it affects the ninth ward the most. And the ninth ward is mostly like what you would call poor people, what you would call the hood or whatever.
Right.
That's what affected the most. And so the government looks at that and they like, okay, yeah, we're gonna turn our head, fuck it. We're gonna get them the little FEMA, but they gonna do good with that. You know,
Right.
that's up.
And then look what happens. People like me who maybe want to invest there, I'm like, now I don't want to invest there because it's in a flood zone and the levees aren't fixed. So why would I take the risk? Also, the cost of insurance, like I think some places they won't even insure your place in New Orleans because it's such a high risk for the insurance company. So yeah, to your point, I mean, it sucks. You know, it's definitely not fair.
Yeah. I just looked it up and it says they started fixing it. It's not done yet, but they're close apparently. But
What's it been like almost 20 years now? Jesus.
It's been a while.
You get what I'm saying?
It was 5, yes. Sandy was 12.
If this affected one of their more wealthier neighborhoods in Louisiana, if the storm affected them like that, the levees would have been fixed. The levees would have been fixed. There would have been more news out there. It would have been a whole new beautiful land right now. For me, a tourist attraction probably, which is sad, bro.
Yeah, sucks.
Yeah.
But that happens in a lot of parts of the country, and it's not just infrastructure, but with environmental concerns too. Like you're saying in Flint, Michigan, where Michael Moore is from, you know, the water. I mean, that's just disgusting what happened with that.
Well,
I
like,
mean, when I heard about that, I couldn't even believe that. Just to save some money on some pipes or something, like
Yeah.
the whole.
they knew knowingly poisoned all these people. I mean, unbelievable. So yeah. Anyway, back to appreciation.
Yeah.
Yeah, so I mean, if you are able to do your research and think ahead and try to find the right markets, appreciation is a great thing. I'm in the process now. You know, my next step in one part of my business, my rental properties, I want to do what's called a cash out refinance. I want to take this equity, this 66K out of thin air, and I want to refinance the loan and go buy something else. So now I'm actually researching right now. I'm trying to figure out what's a good neighborhood to invest in. What state do I want to be in? Tennessee more, or maybe I want to look in some other areas. I'm starting to look into Indiana, maybe outside of Chicago. You know, there's a lot of great areas. Maybe Austin, Texas, everyone's moving there. Who knows? You know, so I'm just starting to do that right now.
My cousin is moving to Texas. She got.
Isn't Texas like notorious for like cheap real estate?
Yeah, that's a
We
fact.
saw what happened to their energy
But
grid.
the only thing is,
I feel
a lot of people be scared to move down there because like
Say it.
the history.
Yes.
Hell yeah.
You're
So
right.
I ain't gonna front. I'm not
Don't
going
front.
there. I'm not
Say it.
going, bro.
Say it. It's
I would because it's a beautiful land, but I'm not. Hell no. Florida and Texas not getting me. Nah, I can't. Like I love people.
Right.
Don't love
Well, that's
people.
one of the things you have to consider, right? The culture, the laws. So some laws are more tenant friendly, some more laws are more landlord. Like in New York State, right? If you don't pay your rent, you fall behind on your rent. You could live there for over a year. It takes a landlord forever to evict you. In places like Texas or Tennessee or Indiana, if you fall, or even Colorado, if I found out, my friend owns property in Colorado. I found out in Colorado, if you fall behind on your rent, they could throw you out in like a week. Like it's
Wow.
like crazy. Yeah.
They don't play then.
So I also found out, this is crazy. I just read this in Colorado. A landlord can just go to your place and like, they don't even have to give you notice. Like
You could just say go.
they could just walk into your, yeah, there's no notice landlord. You could just walk into someone's, isn't that crazy?
Yeah.
Like in New York, you have to give notice like 2 or 3 days ahead of time. I'm gonna come to your property. It's crazy. But every state's different. That's why you have to do your homework, you know?
Starbucks coming.
So I have a friend who owns a lot of property upstate New York. Owns like 84 units.
Where in upstate New York?
Like I think like Newburgh, Kingston, like all these like Hudson
You said
Valley.
Kingston and where?
Like Newburgh, Poughkeepsie, Beacon, like all those areas. It's called the Hudson Valley, and it's along the Hudson River. But anyway, because of the pandemic, like her tenants fell behind on rent. So a lot of them lost their jobs, whatever. So she's owed like $150,000 in back rent.
There's a reservation up there.
There's Indian reservations up there, yeah.
Yeah.
But anyway, the point is, if she owned in Colorado or Texas, she could just evict those people, but she can't because she's left holding the bag. So just because someone's a landlord doesn't mean they're rich. Like they still have to make a mortgage payment. You know what I mean?
Yep.
If the tenant doesn't pay rent, then they might lose the house. Then the tenant's really screwed. Now they have to get out. You know what I mean? So you got to just do your homework. But anyway, that's appreciation. The last thing I want to talk to you guys about is about leverage.
Yeah, I feel like that's a really important concept, especially for like beginners.
Yep.
Which one, appreciation or leverage?
Leverage.
Yeah.
Like
Okay, yeah.
if you don't have that much money to work with, then
I ain't gonna find. I want to invest in real estate too. But when I wanted to do it, I wanted to do it with brownstones specifically, not homes. The reason I say brownstones is because where I'm from, they get brought out a lot. They get brought up. People get evicted, all that, just to get their brownstone taken. And
What neighborhood is that?
Bed-Stuy, all
Okay,
around
Brooklyn, yeah.
Brooklyn. And all of these brownstones, they used to be regular family homes, and then now they $1 million, all of them. And I want to buy one. I want to create low-income housing inside of them, and have 2 apartments as B&Bs to support.
Oh, nice.
To give the other tenants leverage to pay low income. You know what I'm saying? I don't know.
Yeah, that's good. That's a good idea. That's a really good idea.
And basically what I was gonna do in the 2 B&Bs was like customize it like with a lot of cheap, not cheap stuff, but like a lot of stuff that make it look like a mansion, a mini mansion.
Nice.
Yeah, and those two B&Bs is gonna keep the income that all the other tenants don't have to pay.
That's a really good idea. Yeah, that's one way to do it. That's kind of like house hacking. That's like, I don't know if you guys have heard of this, where you like move into a multifamily and live in one part of it and then rent out the other parts so they help you cover your mortgage payment. But what you're saying, if you want to do like public discounted housing and then, because Airbnb, the high turnover, that creates more rental income than a long-term lease, like a 12-month lease, because it's higher turnover. So that'll increase the income and that'll help subsidize the other less expensive units. That's actually a really good idea.
Thank you, bro.
So yeah, so I just want to, this is the last thing, I just want to discuss leverage, and I think John's going to comment on this a little bit too, but it's so important to understand this. So real estate is one of the few assets that you can buy where you don't have to put up all the money, right? So for example, for this house, I put 20% down to buy it. So again, I paid, the purchase price was $74K. So 20% of that's like $14,800. So I controlled a $74,000 building with only about 20,000 out of pocket, because for closing costs are like $5,000, right? So all out of pocket, I was like 20K. And by the way, I saved that money by literally eating peanut butter and jelly every day for like a year, just to save money. Like I never went out, like it's crazy, but I did it. Yeah. And that's how I got my first property. And, look at it now, like all the appreciation just from like saving up a 20K down payment, suddenly it's like worth all this money. But anyway, point is that with leverage, you could buy something worth more for only like 20%. And on top of that, the cool thing about leverage is the appreciation, right? So this building appreciated from 74 to 140K. So I get to participate in the entire amount of that value increase. I don't just get 20% of the difference between 74 and 140. All that's mine, like all that appreciation. It's incredible. Like I still am only out that initial down payment, but I own, minus the loan, that entire value of the house. It's totally bananas. Like it's crazy. So yeah, so that's leverage. I mean, it's like, this is how you build wealth, guys. Like I'm putting you guys on game. Like, I hope you're taking notes. Like this is serious stuff here. Like this is how you build wealth. This is how you you can really change your life and your family's life with this stuff.
Can you
email us?
Yeah, the PowerPoint.
Yeah, I'll send it to you guys.
Ben brought up a good point about real estate being a great area to use leverage in. You just have to remember that leverage can be as a two-sided thing. So if you use leverage to invest in riskier assets that are very volatile, you run into the problem that when you own this asset, whatever it be, let's call it, maybe it's a stock or maybe it's Bitcoin. And
Right, like buying on margin you're talking about, right, John?
yeah, but that's a form of leverage. You're only putting up 5 times the leverage, which is what this 20% is. So you have to be careful that the asset that you're using leverage for, and again, we're talking about real estate today, leverage is perfectly acceptable. But because I mean, this house isn't going to go down 50% overnight or in a short period of time. It's, whether a trend makes it, whatever. But Bitcoin or something like that. So you try to buy something that on leverage and it goes against you. And then the bank that you're borrowing money from is going to ask you for more collateral. Because again, in this instance, the house is the collateral and you own it. So no one has to come ask you for more money. So it's just something to think about. You have to buy smart. You have to do your homework. You have to know what you're buying and what you're using the leverage for. And
absolutely. Yeah. And another thing that's interesting about this, like to John's point, so you have to ask yourself, like, why will a bank lend you all this money to buy a house, right? Like, let's say the house is 100K, you put 20% down. Why are they going to give you $80,000 to buy a house? The reason is because if you screw up and you stop making those payments, they could take back the house. It's called a foreclosure, right? They still kind of own the house. Like you're just kind of like, you own it, but like they kind of still own most of it.
right. No, anytime
you get all the benefits of that appreciation. So yeah, you own it, but if you screw up and you can't make those payments, they'll take it back. So there's really no risk for a bank to loan money on a house.
They trap you.
What's that?
They trap you basically.
Well, no, I mean, look, there's one part of this equation. If you look at this, under the bullet point, 20% of 74,000, you see, you got to say to yourself, well, what about the other 80%? And that's where the bank comes in. They own the other 80%. And as really, they own the house, actually, then they, and
Until you pay them.
Yeah, until you pay it off.
so that is something
That's how
that
I bought my place.
if you can't pay the mortgage, yeah, they're,
So wait, like, okay, you put 20% down to buy the house, right? So
Yeah,
you buy the house from the bank,
The bank.
no, you buy it
I
from.
bought the house
seller.
from some other guy who used to own it.
okay? So you get it from a homeowner. So the 14K you saved up on your own,
Right,
okay? So you owe the rest, right
To
or
the bank.
wrong?
to the bank, to the bank who's giving you a quote, a mortgage to buy it. They're lending you
What is
money.
it?
It's a fancy name for a loan, a mortgage.
Yeah,
Oh,
yeah, that's how I bought my place.
so okay, hold on. You pay 14,000. The house is worth 70.
74.
I pay 20% of that, that's 14, right? Now you pay that 14, you own the house, right? So
Yeah.
you gotta pay rent,
No, no.
you gotta pay mortgage.
Yeah, but you can rent
Yeah,
out.
here, let me go back. You missed part of this. Hold on a second.
Yeah, go back to that, Ben.
Here. You, type, you see this?
Yeah,
Okay, so I pay my mortgage payment on this is like, I think it's like, oh, here it is right here. It's about $380 a month. So this is what I pay. All these expenses are the landlord's expenses, right? So every month I pay a guy 10% of the rent, $100 to manage it. I pay my mortgage payment, principal, interest, taxes, insurance, repairs, LLC fees, vacancy, capital improvement. So I pay $670, but then the tenant pays me the income $1,000. So I make the difference. The difference is $330 a month.
and then some of those $330 is going to, oh no, you already put that towards mortgage. Okay.
Yeah, that's the profit. That's the monthly. That's what this is. This is, you missed this whole part because you came late. So this is the income part of it. Yeah.
I get it now, I get it.
So you're working towards like paying
Yeah.
off the house and also getting money.
And after the mortgage is paid, that's your house that you could live in forever, no paying rent.
No, but you still.
So you gotta pay
taxes.
utilities and.
Oh, we gotta pay
Right.
taxes.
There's all this other stuff.
And I pay taxes to the government, property taxes for sure.
I thought you only pay taxes on stuff that you make money from.
No.
If it's a
Well,
house,
you know-
that's
Property taxes.
We'll have to do a whole session on taxes, Ben.
Yeah, we got to do the taxes. We got to go back.
We will,
to
we will.
because we don't know about our taxes, yo. We gonna
Well,
buy
there's
all this
property,
stuff.
there is income taxes, but there's property. When you go buy a sweater, Ebo, you pay sales tax.
Yeah.
Wait, what did you say, John?
I just say, she said, I thought you only pay taxes when you make money. And that is income tax is the biggest tax you pay. But you're paying, when you go buy a sweater and you pay the guy, it's a $10 sweater and he charges you $11.20. It's because there's a 8% sales tax on it. So, and with a house, you own a house, you pay what they call property taxes to the usually the local government. I think, you own a home in New York, you pay property taxes, which are a lot, and that's what pays for, your maintenance around your home, whether it's
Yeah,
police,
school,
trash,
firemen, cops, all that stuff, roads, all that all contributes to that. I think property tax mostly goes to schools, I think.
schools.
If I'm wrong. Because they want, people that live in the neighborhood to pay for the schools, whereas like sales tax, any tourists pay that, right? Like anyone coming in and out.
But we'll
So,
say
yeah,
that
that's
for
where
another
most
day.
people
That's
go.
the whole thing.
Actually, one of the things I'm dealing with now is the property taxes just went up for this house. So I'm gonna have to raise the rents. And I've actually never done that before because I actually manage this house myself. So that's gonna be a conversation I'm gonna have to have with the tenant, who's awesome, by the way. We text and stuff. She pays me on the Cash App. That's how she pays rent every month. She's great. And I've done everything right. Like I fix stuff right away. I don't mess around. So I think she'll be cool with it, but I don't know. It's going to be interesting. That's another challenge as a landlord, like as a real estate investor, is like, how do you approach this? Like, it's like, you have to go to someone and be like, I have to raise the rent, so
Yeah.
we'll see how that goes.
Yep, best of luck to you. But I had one more question about leverage.
Yeah.
So are there other ways to sort of like have control over a property? Because I think I've heard somewhere online that like there's like places where you could like pay for like a property's like back taxes and then you get some sort of like
Yeah. So
yeah.
that's
So can you like explain that further? Because I only like
sure.
know like yeah.
This is another way to get into a property. It's called investing in tax lien certificates. So you can actually, this is all public record. So if somebody is late on their taxes, that's public record. By the way, also the purchase price of a house is public record. So you can see the history, the price history of a house. You could see the tax assessment of a house. That's all public record. You usually find it on the local county tax assessor's website. But from what you're saying, yeah. So there's actually this guru guy I used to follow who his whole thing was investing in tax lien certificates. Because basically what happens is someone owes money on their taxes and the government realizes they're never going to pay it. So they create something called a tax lien certificate. So it's a lien against the house for back taxes. And then they actually sell them at auctions. Like the government has these like auctions where you can, the public can buy these tax liens. And basically it's a way where if you pay the back taxes on the property, then it's like a backdoor way to get into the house. I don't know all the specifics on it, but you can basically like buy a house that is super cheap at a discount by investing in tax lien certificates. It's like a whole area of real estate investment.
Once you purchase the tax lien, the house is
You gotta pay
yours, not.
Here's what I'm saying. I don't know all the specific. I think it's something like you purchase the lien and then the person who owes the money has like a time period to pay it. And if they don't pay it, then you get the house. Something crazy like that.
Okay.
Would you
Yeah,
have to
you should look into it. You should Google it. Like there's a lot of people who teach it. It's a way to get into properties super cheap.
Yeah,
would you have to pay what they owe?
I think so. I think that's how it works. I'm not exactly sure. It's not something I do, but there's a lot of people who know about it. Like I'm sure if you go on YouTube and just like type in investing in tax lien certificates, there's like 100 people that'll explain it.
Okay. Yeah, I'll take a look at that later on today.
Yep.
It's 4:15. It's 4:15.
All right.
Oh, it is already? Wow, time flies.
Yeah.
Guys, when you're having fun.
Yeah.
Mhm.
I want to ask you, damn, y'all seen Dogecoin shooting up, right?
What's that?
I seen Dogecoin going up.
Oh, Dogecoin. Yeah.
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 Did you invest in it?
I have a little Doge.
I know yesterday and today you was waking up happy.
I know. I couldn't believe it. I just put it, it's like a side thing. It's fun, whatever. Like, honestly, all these, I know so little about cryptocurrency. Like, honestly, it scares me, but it's mostly like FOMO. I'm like, oh, I'll put in a few bucks just in case it goes up, whatever.
Yeah. And I feel like it, like Dogecoin is great. It's gonna get like the new generation, new society, like everybody a chance to get there. Literally.
I don't know. I'm not the guy to talk to you about cryptocurrencies.
Yeah.
But anyway,
I just like stocks, and Dogecoin is one of them.
well, it's not a stock though. That's the thing. You have to realize there's no company behind it making revenue. It's just like a concept,
Yeah.
Anyway, we could probably wrap it up because we're over time. But do you guys have any more questions about real estate stuff? Anything?
No, not for today.
Do
Can you
you,
get these in our email?
Yeah, I'll send it to you guys. Yep.
Thank you.
and Ben, do you want to talk about Richard, who's coming next week?
Oh yeah, real quick. So next week, a buddy of mine who actually came to speak at Kaplan House a few years ago is gonna jump on the Zoom and he's gonna talk about his career. He's from the DR, he's from the Dominican Republic, and he's actually there now on vacation, but he's gonna be back next week. And he's like kind of like a rags to riches story. Like he grew up, like didn't really have much, his family, and he's become a really successful real estate broker. So that's like the other side of real estate. This is investing stuff. He sells to retail buyers who just live in the house, right? But that's a huge, if you could do well at that, you could do really well. And he's, God bless, he's done really well. He's a very sharp guy. He looks like a GQ guy, like he wears a nice suit and everything. Like you'll see when you meet
Me and him from the same island.
Very well-spoken guy. Like you'll get, his name is Richard Rojas, and he's gonna come speak to you guys next week. So I'm really excited about that.
Yeah, me too. Okay.
Okay. Looking
Right.
forward to it then.
Yeah, it's gonna be fun.
Right.
Igor, when they send you that. send you
So I guess I can
I
stop
got you.
there.
I got
Stop
you.
there, so
I
I
got
see I'm
you.
interested.
Good stuff. All right, guys.
Okay, thanks a
Okay.
lot,
Yeah,
everybody.
as always, thanks for giving us your time.
All right,
Thanks, guys. Thanks for being a great
Have a good
audience.
week.
All right, y'all have a good night.
Yep.
All right, take care, guys.